Join us as we disrupt the global real estate industry, revolutionizing the future of property investment and ownership.
The world has changed. Future without boundaries is just around the corner. The way we live today can become obsolete tomorrow. A whole new dimension driven by the evolution of AI and virtual reality. Are you ready for the inevitable?
From meme to utility, Floki has it all. NFT metaverse game called Valhalla. Floki University, DeFi, charity, and shopping. Floki is governed by the people, for the people. Floki, together there is no stopping us.
Good afternoon, everyone. BC Richfield here, live from a beautiful sunny day in London. It's great to be back with you all after a short break. I went over to Jersey, which is part of the British Channel Islands, and I just have to say, if anybody gets the opportunity to go over there, it is one of the most stunning places you could wish to go to. But enough about that. If you do get the chance to check it out, I would absolutely recommend it. But just want to get straight back into it, jump into some charts, and want to start today with Bitcoin. Okay, so let me just make this full screen. Apologies, got a little bit of a come back with a little bit of a cold, but hopefully not too croaky for you all. Just want to say a really, really good morning to everyone that's already here. Erica, Harms, brilliant to see you back on the stream, mate. Trader Mum, Joe, always here as well. Knit You Beauty, great and straight in with the banter as well. Smeejo, apparent apologies for almost certainly murdering your lovely name, but welcome and thank you very much. DM Photographic as well. Good morning or good afternoon, wherever you are in the world. And for some people, good evening. I think it's going to be a bit late for our lovely Kelly Barker and probably Boldest as well, who are our friends based over in New Zealand, but we will get the streams back a little bit earlier than this. Something that's going to be quite interesting about today's stream being at 1:30 is that we're now at the start of the New York session, right? So I actually want to start doing a few more of these moving over. Liberation Ale, brilliant. Great to hear, Zambuca. I didn't have one of those, mate. No, I didn't, but we just had the most lovely time. Amazing food. The beaches are just insane. So I think we're going to have to find a way to get over with the Husky at some point. Maybe get the night ferry or something. Hey, Whack. How you doing, buddy? Hey, Craigie boy. The time change is no good for us. Workers might be able to join in 30 minutes. Sorry, mate. Do you know what? I actually thought about you today with the later session as well, and I knew this might mess you up, so apologies. But I think what I'll try and do is maybe just add additional sessions rather than kind of go into our Monday and Wednesdays, so that we can look at kind of some real-time trades as well. Because I know that's really kind of what a lot of people are crying out for. It's what we do in the community at the Bird Nest. But it'd be nice to kind of share it live and free for some people as well. Gregory Bauer, good morning, mate, from Colorado. Beautiful. Lovely, lovely, lovely. Got some fantastic places and wonderful friends in the States. Somewhere I really need to get over to a lot more. Right, so before I kind of go off track, which is my normal routine, so 4 minutes in is actually quite good for me. I've taken everything off the charts and I just want to kind of start and kind of get a high time frame picture. Now, I have been trading predominantly equity markets, right? So NASDAQ and ES. So we're going to cover those as well. But they have been just absolute beasts. And actually what Nick mentions here is something I want to go through with you guys today, right? Which is how we look for the New York Open and how this can kind of help us gauge kind of our bias just based on the New York opening price, okay? But first of all, I just want us to do a top down, right? So let's look at this on Bitcoin. Now, for those of you that maybe aren't familiar with it, I'm always looking for liquidity, meaning that where are the major players in this market trying to move price to, okay? And the reason for that is because above old highs, below old lows, there's liquidity, right? The other place we have liquidity resting are within gaps, yeah? So our fair value gaps. Now, how we would use something like this is the principle that if price has gone and taken external liquidity, meaning an old high, so see how we've taken this here, right? Let me just zoom that in for you guys as well. Then the principle is quite simple. Once we take liquidity above an old high, we either want to see price displace over that, meaning that we get a really strong close, yeah, in which case we expect price to move higher before retreating. If not, then our expectation is that price then looks to come down to find balance within a fair value gap, and it will do one of two things. Excuse me, from here. We will either get and hold this area, right? And then price will regain structure, all right? And then we look to kind of get involved around here. Or price will ultimately break down from this. And we want to see a strong close, meaning that we get a high body close. This then becomes an inversion fair value gap. It's showing weakness. It means that price is looking for liquidity lower. Now, in this instance, we have a number of fair value gaps underneath, right? So with this, we would basically be looking to move down onto the lower time frames to see setups and look at kind of how the market is moving. So watching market dynamics, okay? And that's how price moves and how it closes. So just for example, when we were looking at the situation that we've got here, when we're looking at these fair value gaps, right? So before price played out here, we got this close below, we set this fair value gap, all right? So once again, we're looking here at external liquidity being taken. Yeah, so we expect price to come and rebalance this. And then ultimately, if it's going to retain its bearish trend, right, then we expect price to continue down, right? So we would expect price to come into here and ultimately move lower. So what tells us that's not going to happen is this, right? See, we get this strong close, like I call a strong close. Look at the body of this candle. That's just not messing around, right? That's a lot of bullish action in that candle. So as we get this, we can then look before and say, okay, well, the candles are kind of giving us an idea here, right? Then we're asking ourselves, where is price delivering from, right? That's where we need to look left. And in this case, we can see here that we have this bullish fair value gap right here. Thank you. And also we've got one underneath it. Now, I'm interested in the wicks, right? But I'm not paying a lot of attention to what they do. If they're getting bought up like these are, yeah, then quite simply, I need to see a close below these. If price closed below here, I'd expect it to come to at least here. But ultimately, look what happened. Price dipped through and got bought up, leaving us this kind of pin bar candle, all right? The top bit here we call a nose. So it's a pin bar with kind of a short nose. But you can see, look at the long downside wicks, right? That's showing absorption and price is getting bought up. Right, so they're the kind of very basic principles. I'm going to write some material on this soon. There's everything on this is available to members of the Bird Nest as well. You can join the community for free, try it out. But also I'll be putting a lot more stuff in the public domain as well. So what I'm interested in here, right, is is this. So what we got here, let me just draw this up, do this in a slightly lighter purple. It is an inverted fair value gap because we would expect price to be rejected here. Why would we expect price to be rejected here? Because resistance, yeah, strong close above. So the expectation is that price is now seeking liquidity here, right? So quite a simple principle, but it doesn't mean obviously that it goes there in a straight line. Now we have obviously had some very, very bullish price action. But the thing is, when we get an inversion fair value gap like this, and in this case, we have a bearish one, a bearish candle, yeah, the 3 candle pattern. When we then create another fair value gap, or in this case, 2 fair value gaps coming through this then becomes a balanced price range, right? Which you'll see on my charts as a BPR in a slightly lighter shade of purple. What that means is that we really expect this area to offer some support, yeah? So price could, you know, come all the way down into this area before reversing and going up. Ultimately, price could come down, close below this and look to target liquidity down here. We just don't know what it's going to do. What we do is we keep our bias in line with the main trend, in this case, the daily, which is clearly bullish, yeah? Higher highs, higher lows. However, price could just pop from here and go up to here, could come down into this fair value gap, right, before moving higher. It could come down into all the way down into this one, or it could take liquidity down here. What we want to do is take it level to level and play by play, okay? So now as we drop down onto our 4-hour chart, this is where we're trying to find a little more context, okay? So the lines that you see on the chart here are session breaks. If you're not familiar, you can just go to the settings on your chart and then you can just click them on or off here. Yeah, I like to have them on because I like to see where the liquidity is resting below the prior day's high. And just as I hear my Discord bleep off and realize I haven't shut it, I can hear Erica in the back of my mind because she sent me a lovely message while I was away telling me how I can mute the sounds on that without having to quit it. But I'm going to quit it and then I'm going to find that message, Erica, as well. Tammy, hey, how you doing? Great to see you in the chat. So moving on to this, principles remain the same. We remember our higher time frame bias, right, which is bullish. So ultimately, we're looking for price to reach for here, yeah? This is our liquidity target. We also have this high here as well. So on the state of the 4 hour, there's not really any gaps here. There's a very, very small gap actually down here, okay, that we can see, which is our bullish fair value gap. But price really kind of hasn't told us much. Obviously, we've gone through Sunday, price has consolidated. We had a really, really nice run up here on Saturday. We've got the equity markets that are incredibly bullish at the moment as well. But it's going to be a tricky week. You know, I think we've got CPI this week as well. Let me just have a look. I think that's on, yeah, so that's tomorrow, which for those of you that don't know, that's obviously, it has a massive impact on the financial markets, depending on what those figures are. So we've had one heck of a bullish run on equities, which we'll take a look at a bit later. And obviously, we've had a really, really nice resurgence on Bitcoin as well. And Hans, yeah, exactly. That does very much look like a bull flag. And what Hans is talking about here is this. All right. Yeah, and Hans is right there as well. There is an insane news week coming up. Right. So you see this forms like a flag, right? Now, Burb is the absolute master when it comes to pattern trading as well. And actually Axel Kaibar, who's just one of the best I've ever seen, both CMT chartered market technicians, right? So if that's something that interests you, please do check their stuff out because they're absolutely incredible. The idea of this is when we see these consolidation patterns, often when price is kind of consolidating in this way, then what we're looking for price to do here is run some kind of liquidity at the lows as it's kind of done here, and then break out and continue upwards. Now, I can't remember the exact statistic, so I don't want to mislead you, but it's basically from an odds perspective of historical data, you have a higher odds chance of this pattern breaking to the upside than you do to the downside. So that's something that we can factor in. Now, I tend to kind of use these areas a lot more as looking at where liquidity is resting. And what's a little bit unclear about these two at the moment is you've got this abnormal wick here and a slightly abnormal wick here, right? Now, this was obviously a big rejection, right? Now that's come in overnight. So we've seen this during Asia. So now as we drop down to our hourly to just kind of gain a little bit more context, we can see one thing here on the hourly that price is doing is we have a really big, obvious, clean fair value gap here, right? So let me draw this in so we can get some context. So that's our hourly fair value gap. So price is currently within this, right? So it's currently holding this. Now, don't get me wrong, we've had wicks go through it. People will treat these differently. Some people, for me, I like to see a body close below it. At the moment, for me, the bodies are respecting this, right? So it's valid. So while we're looking at this, we're saying, okay, well, where do we think price is going to go from here? Well, one thing that we've got up here is this bearish FVG, right? So let me just pop that in. And I'm actually going to get rid of this one below just to keep the chart a little bit cleaner. So price is ultimately delivering from, remember what we're asking ourselves, we're saying, okay, has price taken any kind of liquidity? No. We've got relative equal lows down here, all right? So we've got this, which was 6 a.m., all right? So just before we stepped into the London session. So this is obviously June to the close of Asia. So if we're looking at our principle of price running external liquidity to internal, then we might be looking at something like this. So what we want to do is we want to watch when price gets to these key areas. If I'm looking for a confirmation setup, a bullish confirmation setup, what I would want to see is price come up and close through this hourly FVG here. Yeah. Now we do need to be cautious. We've got this sneaky little high up here, right, which is an intermediate term high. It's a high that's within a fair value gap, right? And these offer good liquidity pools. So again, back to that principle that we're always hunting liquidity, okay? But just in this, I'm going to put this as green so we can see that this is a bullish candle. We get the close above this, I really think we're going to make a strong attempt at this high and this high here, all right? Now, again, I'm not just going to blindly jump on board with that. I'm going to look on lower time frames for lower time frame setups to get involved. So what we're doing is we're taking the different time frames and we're giving ourselves options, right? We're giving ourselves plays in both directions. We don't want to, or I never want to kind of come to the charts and enforce my bias on the charts. We also need to be aware that the higher the time frame, the more I want to respect that time frame, right? So if I go down onto the 5-minute chart now and I find a bullish fair value gap and price looking from there, am I just going to start targeting this higher? No, I still want to be aware of what the higher time frame is doing here, all right? So as we drop down, I'm now going to go to a 15-minute. And looking at this here, stepping into this, right? we just got this play slightly before, right? Now, this has all got a little bit messy. However, the lower the time frame you push on cryptocurrency, Bitcoin, and especially, you know, low caps, then you can get these being a little bit unclear, right? So for me, had we got this close above within the New York trading session, we actually got it here at 12:45, right? So 45 minutes before the start of our New York session. These sessions are based around kill zones, okay, which is an ICT concept. You can check that out. It's something I really, really like to do because we're using high volume sessions, right? Meaning there's a lot of volume, trading volume coming in. So we can expect decent moves and high volatility. Now, the way prices kind of broke above this has come back down into this area, right? Now, one thing that we have done here is kind of set this order block, right? So I'm just going to do that as a thick black line, just so that we don't have too much stuff across on our chart. Now, I use the body of the candle here. And what I like about this is the change in state of delivery with a really big bullish candle. So right now, gun to my head, I would be saying, okay, well, you know, as long as we hold this on the low time frames, we'd be looking for price to push up into here. Okay. So what we would do is move to, say, a lower time frame, right? And then look for a setup in the way of, say, like a fair value gap inversion, which I really like to use. And we also have this actually, which is really key. So this is our balanced price range, right? Remember, like we did on the higher time frame, we do it in a lighter purple. So if we close above this on the 5 minute, yeah, so this 5 minute candle closes in, say, 2 minutes 30 here. If it obviously runs too high up, then we have to be aware that our risk to reward might not be there. But then I'll be targeting this and ultimately this above, right? Now, I'm a little bit more cautious with crypto moving down onto the really low charts, right? But let's say we get that 5 minute chart close above. Also, don't forget, as we said earlier, always asking ourselves a question, where is price delivering from? Yeah. And we can see here, I'll just do this in green, so it just highlights it over the top. Price is delivering from a bullish fair value gap here, right? So the time frames that you use for your triple screen system, for those of you that don't know what that is, we're using a combination of 3 different time frames, right, to ultimately come to our decision. Sometimes you can, you know, feather in other time frames as well, but ultimately you don't want to overcomplicate things for yourself, right? So very common ones can be, for example, you can use the daily. Oh, Claudia, you beauty, we were just saying what an absolute soldier you are. So Claudia is a dear friend of ours all the way, and a member of the Bird Nest all the way from New Zealand, who I don't even know what time it is up there today. I'm actually quite a big San Francisco 49ers fan, and they played in the Super Bowl last night, and I intended to stay up and watch it. And I did manage to get the first beginning part of it in, and then was just unfortunately really, really ill. Got a bit of a dodgy takeaway last night, unfortunately, so not feeling the best today. However, not as hardcore as Claudia. Yeah, it's 2:48 a.m. There we go. Ladies and gentlemen, that is the commitment that warrants a lot of respect. So before I digress, quick sip of tea. All right. Now, look at how price is getting suppressed here. Okay. So the danger is, yes, we're delivering from this, but you see how we've layered on a number of different levels that allow us to kind of formulate a bias here where we're not just kind of jumping in. Because sure, you know, you could jump into the chart here and you could be like, okay, well, we now had the tiniest close above this. I'm going to ignore this balanced price range here, jump into the charts. I have to put my stop below here, or at the very worst, where we've now closed above this, forming an order block, you could put it under the order block here and then chase to that high. However, we don't have confirmation, right? So remember what I said, we've now got 16 seconds, 15 seconds, right? So without that close above, this just simply isn't valid, right? Because this balanced price range here is containing price. So I much prefer to find a confirmation setup here. Now, there's every chance, right, that, see, we've got that close and look at the upside wicks here. Now, price could absolutely just make a run from here, but I'm not interested in gambling like that, right? I want to see confirmation. So now this 5 minute candle's here, yeah? I want to see the same thing. I'd still want to see this close above. Now, as we can appreciate, this whole thing could just completely run for it. And I've not got a problem with that, right? Now, I'm going to move down onto a, excuse me, onto a 1 minute time frame. Now, this is obviously a very, very aggressive time frame to trade. I like trading this on NQ, right? But ultimately on Bitcoin, it can get a little bit choppy down at these levels, okay? So what we're doing here, we can see the same principles apply. Now, what we would want to see in an ideal world here is a bearish fair value gap formed here, yeah? And then if we ripped and closed above it, we could go. Hans, no worries, my man. Yeah, they'll definitely be on there for everybody to rewatch. No problem. You have a fantastic day, my friend. Always a pleasure to have you on the stream. So you see, we've got the close here, no fair value gap here, right? So again, we always need to bow to our higher time frame, but we look at the lower time frame there as well to give us an indication. Our kind of ideal scenario here is that we get this close above around about here, and then we can chase the trade into these highs. Okay, what we will do, and look, it's not, no, never apologize, mate. It's always just a joy to have you on. It's my fault for making this a bit of a later one today, but it has been great to be on here with you all. I couldn't miss it. We need to just remember as we're in here, right? We're delivering from this bullish fair value gap, right? But we're kind of high time frame bias at the moment. You know, we think price is reaching higher, and that's the plan, yeah. But we still want that kind of confirmation. For me here, these kind of rejections we're getting from this balanced price range just isn't giving me the conviction for kind of price to get back above this at the moment. So I'm going to remain patient. Now, obviously what we would want to see, and again, this is why it's really, really dangerous to kind of jump into these trades. We also need to look here, right, and say we've got gaps here, price, obviously, as we get above here. Once we get that 5-minute confirmation, we have the conviction that things are going to move up. But without that, we're ultimately kind of stuck at the moment. So let's go back to our 15-minute for a moment. Yakuza Kana, hello, mate. Right, we can see, obviously, this is lower time frame. This is what we're interested in here. We have had that close above, right? Now, feeling the fair. Love that, Stevie boy. That is absolutely brilliant. Feeling the fair value gap in my belly. Awesome. Always hungry for knowledge and hungry for some good grub as well. Professor Loki Crypto. Hello, my friend. Great to see you. Welcome to the stream. So at the moment, I'm really kind of a little bit hesitant on kind of jumping into anything here. While we're kind of being suppressed in this kind of area, we've come back above it, great. But something I do want to show you, and look, this becomes a lot more low probability, this. So we got this close above. Remember, I said to you, if we got this in our session, so these here, and actually let me put on, this is a great kill zone indicator for anybody interested as well. I use one by a guy called Dr. Fuse. He does it, very kindly built it for me, not just for me, obviously, but he gave me a copy. He does sell it. It's very, very cheap, and it's a lifetime membership, and it's brilliant, which is the one that come with our sessions along here. Right, also gives you the cool name at the top and chart and bits and pieces and time frame. But this one is free from Kill Zones by Josh Triple U. All right, let me just get that up on the screen. Josh Triple U. All right, really, really good indicator. And the sessions just kind of come up. They're a little bit clearer on the lower time frames, right? But you'll see what it does. It highlights our Asia range, right? And this is really important because what we're looking at here as a concept is we've got Asia's range. So let's take it from the top to the bottom of that, yeah? Now, that is a big move, right? We've had a lot of movement overnight in Asia. So we can often expect the New York opening session to be a little bit choppy, right? We had a big move across there as well. But obviously, the problem that we've got here is, you know, this is Monday, which is fine. We don't really pay much attention to them over the weekend, right, because they're aligned with traditional markets. But what we like about this in terms of looking for our bullish bias is that we can see prices come in here and swept Asia's low. And I really like that. But then what I don't really like is we kind of swept it, we kind of come back down for it again. We've left these relative equal lows below, which make them a really, really interesting target. Henceforth, why it's quite difficult to kind of lock in a bias today. So guys, please do ask questions and bits and pieces in the chat. If I'm making this a little bit too complex or convoluted, I do want to make sure that it's really nice and clear. Stevie boy, have a fantastic day, my friend. Hopefully see you on Wednesday. So I'm going to pop that off for a second and just look at what we've got here, right? So we've swept Asia's low. For me, that's a really, really cool thing. If you get that indicator, by the way, when you go back, especially on things like NQ, go and have a look how often we will sweep Asia's low or high and then reverse in the opposite direction. It's because it's such a very, very good liquidity pull. But just going back to this wiki, we can see again here that price is still kind of struggling here, right? So when we move down to our 5-minute again, we can see that that balanced price range here is just continuing to reject price. Now, the more and more it shows weakness in these long upside wicks, then, you know, the higher the likelihood is that we kind of move a bit lower. So if we have our focus on the 5-minute here and we say, okay, well, look, there's a key low there. What's supporting price here is this fair value gap, yeah, which we'll just keep in green just so it's nice and clean, right? So now, if we're looking at this, we get this close below here. This is something we could look to chase down into here. And also what we've got, some really juicy, nice lows, nice lows, nice lows. For any ICT traders out there, they would call that low resistance liquidity. Yeah, LR, which you get on there. And again, and then we've got these relative equal lows below. All of a sudden, you know, we're in the bullish picture for the higher time frame, but lower time frame showing this weakness here. If we get this close below here, I think these liquidity targets are going to be hard to ignore. Why? Because basically we're looking at so much of price being delivered by algorithms now. And even if it's not, it makes a lot of sense, right? If you're a major player or a collection of major players in this market that have a long time, that have a lot, to put in positions, you know, tens, hundreds of millions, right? Then you need to target ready-made liquidity, right? Otherwise, you can't just guess where price is going to be. What you know is below here are stop losses, right? So what you can do is you can target those stop losses, right? And what that means is when you hit a stop loss like this, it turns into a market sell order, right? You've taken out the opposite. The market sell order gets filled really quickly. Ultimately, what that can do, though, is larger accounts can use that to buy up those positions, right? Meaning you create a load of sell orders, big players can come in and find a pool of ready-made liquidity that they can fill their buy orders with, and then price can start to move higher. So bearish scenario, we're waiting for a close below this. Bullish scenario, we're waiting for a close above this, yeah? So hopefully that makes sense, guys. The other thing that I wanted to cover with you today as well is Nit actually did a great job of reminding me about this earlier, is looking at the New York opening price, right? Now, that's the price. Let me just clear this up a little bit actually here. Right? That is the price. I'm going to get rid of that too. So just so we know, guys, remember this is currently rejecting price, right? Price is within this higher time frame order block here, right? So that's offering support, as is this FVG. If, and I do tend to put a preference on fair value gaps, right? Highs and lows. So while we're holding this, we want to see a close above this. We've got a couple of minutes on our 5-minute candle. We get that close above, I think we go for the liquidity above the highs. We get the close below, I think we're going to start chasing liquidity a little bit lower. But ultimately, we've had a fairly big move in Asia tonight, so it could just really be playing out for quite a choppy session, which means we would kind of be looking for signatures on our lower time frame. And one of the things that we can play into that is the New York opening price. So what we do is we look at 1:30 p.m. UTC, right? And then we want to hover over that candle, which is here, and the opening price is 47,928, right? So we can take our horizontal ray. We can say, okay, what was it? 47,928. Here we go. So let's see. New York open, right? I'm just going to make that a flat line, actually. No, maybe dashed, actually. It stands out a little bit different, doesn't it? Now, the other thing that we're going to play into this, and I'm going to show you some more examples that be great if this kind of material does interest you for you to go away and test. Basically, a huge part of being a trader is just constant data and constant testing, right? So when we see the New York Open here, often, yeah, if we're trading below it, we want to favor long setups, right? When we're trading above it, we want to favor short setups, okay? And then we ultimately build our context in around that. So let me just pop that back on there. For example, if we were in, say, aggressive scalp mode at the moment, and this would be very, very dangerous purely because we've got this fair value gap supporting price, and we'd really be gambling, right? Is what we'd be doing. But we would be looking for some kind of signature here and saying, okay, well, I'd want to see a really solid 1-minute fair value gap inversion here, right? Now, actually, it looks more likely on the 1 minute that we're going to get a bullish inversion here, all right? And I'm just going to hide these for a second, just so that it remains clear for you guys, right? I'm not saying take this, by the way, but I am saying that what you can see with price delivery is it gives you these clues, yeah? So here's our 1 minute fair value gap. That's currently suppressing price. We can see how it's pushing it down now. If this was to show strength and close above it, then ultimately we have these untapped highs here, here, and here, all the way up to our higher time frame targets. But the problem that we have here is really the fair value gap that we would need to inverse here is this one, right? Now, the issue that we have with that is we have relative equal lows below here, and we also have these big, juicy, bullish fair value gaps, right? But in scalp mode, we're currently above the New York Open. Had we had this setup but slightly higher, right? Then we could have conviction to start shorting this down, right? Now, time frame is obviously everything. What you really want to do is get a really nice high time frame read on price, and then you can go along with your bias. What's really dangerous about trading days like today is we could expect consolidation. We can expect very choppy price action because of what's happened in Asia. The fact that obviously we have equity markets as well, like the NASDAQ, which let's look at on here, for example. I know this is on the 1 minute, but right, we can see here, right, price is coming into this bullish fair value gap here at the minute. So we would be looking for price to hold this. Closing below this, we would then ultimately look for it to be chasing down to the lows, right? If the equity markets are showing weakness, yeah. And have we had that close below? Oh, no. Right, so look at this. So the reason this is on the NASDAQ 100 contract is that TradingView haven't reinstated my live data yet. I'm really not sure why. So we really need to get in touch with them on that. So if you don't know, when you're trading equity markets, you need to pay for the data on TradingView, right? So you see how the body's respecting this at the moment. What we'd want to see here is a close below. Yeah, with the last hourly candle. Now we've got to wait for another hour. Had that candle closed below there, yeah, then it would have been chasing down this low ultimately. So we can see, I mean, has it closed below? I mean, it's very minimal. Right, high of this candle is 17,951.8. Close of this candle was 17,951.8. So they're dead level, right? Dead level. Just a risky play here. But ultimately, what we'd be looking to do here would be this. You would be looking for price to draw back up here. You would ideally want to see it delivering from a fair value gap in here. And you would want to see something like you've had here with this inversion, right? You would want to see price invert it. So this should have been showing strength if we were playing higher. We've got a higher time frame fair value gap here. Now you would have wanted to see a close below, but we've got a real cluster of liquidity under here, right? So ultimately, when we look left, yeah, we've got a fast move up, meaning that we can easily fill that quite quickly on the way down. But again, it's just not delivering very cleanly here at the moment. The start of our session here, as we can see with NASDAQ, if I just pop this back to the 5 minutes so we got more context. Here's our New York opening price at 1330. Yeah, 17. Yeah, it was 17,964.2. Right. So here's our New York opening price. So ultimately, we're trading below that at the moment, remember. So that does factor in as well in terms of looking for longs. So now as we look at this on the 5 minute, yeah, where's price delivering from? Price is delivering from our bullish fair value gap over here, right? Just going to do that in green, guys, just so it really kind of highlights what it is. So ultimately, as we look at that now, yes, we've kind of got this fair value gap here on the hourly. Very hard to say. Basically, it's closed level. So at the moment, this is holding, yeah? So our bullish bias, on the hourly remains, meaning that on the 5 minute, while we see this hold, we can then say, okay, we're delivering from a 5 minute FVG. Do we have a clean lower time frame setup? Yeah. Where we could see the inversion of a fair value gap like this one, for example. Right now, so if we get a 1 minute close above this, then I think price is going to start hunting these highs, right? Now, unfortunately, that doesn't always mean that there's a setup there for us, right? And that's because we still need to consider our risk to reward. But ultimately, look how clean, this is giving us the indication here on NASDAQ, right? Very risky longing this because of all this liquidity resting below. But if we get this close above here, then the chances are higher that price comes to take out this liquidity above, yeah? And then we can start to monitor leaving fair value gaps. Are they being respected? Is price building bullish structure higher, right? Or is it getting rejected and price driving lower? So while we kind of wait a few minutes and see how that plays out, let's just go back and let's go on a 15-minute chart and just take a look at this principle around the New York opening price, right? So just going to really highlight it by putting this on here, yeah? So New York opening price here, so obviously price has opened the candle there. Notice how we drop below it, yeah? Where do we drop into? We get a beautiful long setup here from our bullish fair value gap. So bullish bias because we're below the New York Open. Ultimately, our high time frame bias is bullish as well. And then we can look for these signatures, even here on a 15-minute chart, depending the time frame or type of time frame trader you are. You can see you get this bullish inversion set up here which also closes above this high, meaning that we confirm it as an order block. Have this on here somewhere, I think, actually, no. So you'll typically see these on my chart as just a black thick line, just so it doesn't get too messy. How you would play that is see the strong close to it, see how price quickly reacts, recovers, inverses this fair value gap, closes here, stops below the body of the order block, yeah? And then we can use something like our standard deviations, for example. So this is the manipulation leg from this high down to this low. That's what swept liquidity, right? So we want to make sure that we are working from the low, working from the low to the higher, yeah? So from that low up to the high of that candle. We look at our standard deviations, for which we target typically 2.5, and then we leave runners for a 4, all right? So that's the kind of thing you play. Now, it's very, very dependent on you what type of time frame trader you are. I'm hello, mate, long time. It is no problem for the capsule. Brilliant to see you back. Hope you've been well. So let's just look at another example quickly, right? So here, what do we have here? Okay, so opening price here. So if we're patient here, yeah, so bearing in mind we're still within our trading session here. Now I trade these sessions an hour longer than ICT, right? It's just the data that I use, and especially so if we have poor price delivery in the early session, which we didn't here. We had really lovely bullish price delivery, right? Again, we came in, if we put our other indicator on, we can see how we ran Asia's low. Yeah, Asia's low here, ran Asia's low, recovered really lovely here, all right, which gave us a little bit more of an indication that we might be bullish. But ultimately, price here came in 13.30. We got our open down here, yeah. So we didn't get a short set. We didn't drop below it. So we'd say, okay, well, then we're going to be patient and we want to see key liquidity run, yeah. And in terms of key liquidity, these highs here, right, the relative equal highs that are there. When price ran them here, yeah, that's when we'd be looking for a short setup, right? So let's just look at a couple of others. And again, if this is anything that interests you, I just recommend that you go away and then you can always have a look at that and see how that plays in, to your own findings. Because if we go here again, 13.30, here we see that's the open. What does price do? Drops back down into this bullish fair value gap. We get this beautiful expansion higher, all right? And then we got another setup here, I think. What did we get? So, yeah, we can see opening price here, which is there. Notice how price is above it, comes in, takes liquidity above these equal highs, I think, or maybe doesn't quite run it. No, I don't think it does. But you'd be looking for that in an ideal world to be delivering from a bearish fair value gap, all right? So I hope this is making sense, guys. If it isn't, please do let me know. They're just some really fun concepts that you can go away and try. So let's see what we end up getting here. So there you go, right? See what I was saying before? This wouldn't have been the cleanest setup, but see how we inverted the fair value gap, ultimately chasing liquidity from there, also from there. Now what we're doing is we're monitoring this and saying, okay, well, while this is holding, the chances are that we have bullish continuation, right? Here's our bullish fair value gap. We're going to do this one in green, just so it stands out a little bit. Remember, that's the 5-minute fair value gap, our framing time frame delivery, right? This is our high time frame hourly fair value gap, right? This is telling us to be bullish. That's why we're looking for bullish setups here. Now, would we have taken this? No, just because, look, the key target's here and here. If we're wrong, yeah, this is where price is going to reject from. So what kind of trade do we have? Remember, we have to wait for the close, yeah? So we wait for the close there, and the nearest place I can put my stop loss is under this order block. That's these 3 consecutive candles, right? So if I enter that trade from there and I hope that it hits the second target, I've got the most pathetic risk to reward, right? Now, fine, you might sit there and think, yeah, but, New York price is up here, right? So that's where we've opened. Price is probably going to chase that down, or it might come up to these highs as well, and it absolutely might do. But what I want to wait for are super, super clean setups, right? Where they just work out as a no-brainer. You can really look at it and see where liquidity is resting. So ultimately, we're bullish at the moment because of the factors we discussed. We're holding an hourly fair value gap, yeah? Body respected that to the absolute cent. They had the exact same close, which is the low of that candle to the high of that one. Yeah, we're delivering from a 5-minute bullish fair value gap here. Yeah, which is what has given us our bullish bias. But we don't have a clean singular fair value gap here, nor do we have any kind of structure break at the moment to confirm our bullishness, right? So on the lowest of time frames like we've got here, on the 1 minute, yeah, this is the long setup that we're looking at. But in truth, I wouldn't take this. Do I think that we're going to go higher? Probably. I think we're holding that hourly fair value gap, not really giving us a lot of indications, but we've really failed to displace above this higher. So this is where dynamics comes in, right? Now, if we'd had a clearer run to somewhere up here where we'd had a one-to-one risk to reward to our first high, which is our most likely point of reversal, then I would take the trade and I would just move my stops to entry. Yeah. So then if it comes back like this and takes me out, but we've made our one-to-one, we've trimmed a bit of profit, but ultimately we've reduced our risk on the trade. We can see that we retain and we're still holding this bullish fair value gap here. Yeah. So now we can say, okay, well, what else could give us conviction to move here? What we want to see here is displacement above these highs for price to really pop. And I would actually really, really like to see it close above this bearish fair value gap over here as well, right? Now, that can maybe be a little bit greedy, but we would want to see, if I saw that inverse here, then I'm saying, okay, well, we're getting to at least here. We then watch how price reacts here. If we get a strong close above that, then we have conviction that we're chasing down these highs, right? So this is where momentum comes in, and this is where we can look at how price is delivering. Craigie boy bouncing his meetings, you legend. All right, so this is where we can see this is all about price delivery for me now. You know, is conviction stepping into the market? And look at that, right? Started that next candle and just immediately ripped, right? But we're still failing to get that close above, right? We're reaching above here and we're not getting that strong close. Now, price in this situation can typically either start to lose momentum and drop lower, right? Because the conviction isn't there from the buyers, or it can close aggressively above. It might even rip all the way into this. But this is why we have to be very, very cautious, right? Now, it takes a lot of chart time to really start seeing these moves, and you're never going to be right all the time. The key is that you're right enough, right, that you can then, you know, make a useful strategy that has good returns. You know, someone like Bird, for example, as a swing trader and a trend swing trader is typically right about 30-40% of the time, right? But incredibly profitable, because when he's right, his risk to reward is incredibly high. I have a higher win rate trading low time frames and scalping, but my risk to reward is a lot smaller. So I have to have a higher win rate. You know, I need to and like to maintain my win rate in and around the kind of, you know, mid to high 70s, purely because I have a lot of fees when I'm considering such small moves on cryptocurrency, right? We can see here again, look, the long upside wicks here. And like we said, showing no displacement above here. This led to our concerns that we feel that price is going to be reaching lower. Remember what I said to you earlier as well about why I wouldn't feel confident longing this as another factor are all of these equal lows down here. Price really, really does love to kind of search them out. So again, screen time will kind of teach you this. The more and more you can get in it. I think someone said years ago, which really resonated with me, time in the market can't be replaced by money in the market, meaning that a lot of people try and just throw a big wad of cash at crypto and stuff like that and try and get that to influence, you know, the charts. And, you know, we're never going to influence these charts, right? Quick question here from Erica. And just quickly, guys, if we get this 5-minute close below this fair value gap here, yeah, and we inverse this and we take that out and we get displacement down here, then I'd be looking on a 1 minute here for a setup chasing down these lows here and ultimately this here. All right. So quick question here from Erica. Let's have a look. Quick question. I know you don't trade weekends, but if you were, would you still respect kill zones, or doesn't it matter if traditional markets are closed? It's a really, really good question. I do still respect kill zones, and in truth, where I don't trade weekends, and that's just a personal choice. I think the lower volume conditions, you often see much more ranging situations, but also as well, it's a family thing for me. You know, I like to spend time with family and loved ones, and kind of someone that's used to traditional market setups. You know, we do long hours. You know, we can easily work 12 to 16 hours a day during the week. So you really want to make sure that you're kind of balancing that out. You'll hear differences of opinions on it. People saying, you know, work yourself to burnout culture. I work a lot of hours, right? And that's choice. But in truth, you have to find a way to balance that. So I do try and avoid working weekends. But yeah, I would absolutely do that, Erica. I'd still respect kill zones. Now, this is interesting, right? So we can see here on NASDAQ, now we've closed below this. We have inverted this. So do we just jump into a trade here? No, we don't. Remember what we said before, right? We're going to show caution. So what we want to see here, yeah, you're very welcome, Erica. Always asking the good questions, right? So does everybody get the principle, or for those of you that are left on the stream, I think we've lost about 70% at this stage. Does that make sense why we weren't going into the long here? Yeah. So we can see how we targeted these highs with pretty strong conviction, saying that we inverse this, chances are price is going to take liquidity here and here, but there's not the risk to reward in the setup. So now we're under this. Now we're looking for reasons that we want to be shorting these setups, right? Because we've shown weakness. Brilliant. So this is price kind of showing its hand to me. Now, I'm still not kind of really dripping with conviction, right? Because we still need to remember, and always have to, the price, is still respecting this at the moment. Price could still completely come back and close back above this. But ultimately, price does look heavy. Yeah. We failed to take out this high. Yeah. So we've set a failure swing here. Price is kind of really come down, barely respected this. But this is the key thing that's making me indecisive, is price has respected this, right? Had price closed below this, then I would be absolutely all guns blazing looking for shorts right now. But we still just retain, we move to our confirmation setups, right? So we take that out now because or just bring that back because we've swept those lows, right? So what we want to see here for conviction is price set a bullish fair value gap here, yeah? So let's just say this candle comes up, engages with this and leaves a bullish fair value gap here, right? Which we'll just do in green quickly. Then what we'd look for is the same principle. If price gets above this, but then closes back below it, yeah, that's where we'd be looking for entries, either there or on the pullback. Then we'd be looking for our first target to be here, we'd trim some profit, and then we'd look for the play to be down to here, right? So conviction set up there, say we're above the order block here or above the high, then what we want to see is our first target be a 1-to-1, yeah? As long as our first target here is a 1-to-1, we enter in here again, only if we're short, because only if we set a bullish fair value gap, violate it, and have the extra kind of conviction of delivering from a bearish fair value gap, then the chances for me is that we come down to here. But what I like to do is when we have a clear and obvious low like this, is I would move my stop to entry here. I would, if I'm trading cryptocurrency, I'll take enough out of the trade to cover my fees, because these are small percentage moves that we're trading, meaning that we have high fees to consider. If I'm trading a prop account, so a funded account, or if I'm trading this in traditional markets, then what I would do is typically open a 4-contract mini position, and I would sell 1 or 2 of the contracts when we get to target 1. All right. So this is going to be interesting. So we just want to see how this plays out down here as well. Really sorry, WB. I'm guessing that beautiful language you're speaking down there is potentially Polish, which would obviously be the language of our good friend CryptoBird. But I'm unfortunately not well versed in that tongue. But hopefully you're finding the information interesting, or maybe just having a good old laugh at me rattling on. But either way, I hope you're finding it entertaining. So, because we're, sorry, just to go back to this quickly, because we're below the New York Open here as well, is another reason that actually we want to be patient here and potentially look for price to run some key liquidity, which we could be this down here, and then look for a recovery from here, yeah, in a position that we can get involved. We want to see kind of price come down, sweep some liquidity like this, and then we want to kind of see some structure break here that gives us a little bit of conviction to get into some long setups, all right? But at the moment, if we were looking to short this, we can see price kind of struggling to displace below this low. Price got bought up quite well here. We just want to see price have this bit of recovery, setting this bullish FVG, and then look to short that if we break back down. If not, and we start to just consolidate in this range, we just have to show patience, right? Trading is something that, it will just test and test and test your will to absolute pieces, right? Because you have to show patience, you have to show conviction, right? So as we can see down here, yeah, as we were discussing earlier, New York Open here, right? We didn't manage to get below it this time, but we did have this lovely FVG here. Well, actually, what we did have in here, we did dip down below the New York Open here right at the beginning of the session, right? Then we did have this recovery. We highlighted this fair value gap over here, which did become our inversion. Price closed above this here, meaning that it gave us the opportunity to enter a long position chasing down the highs, which we previously marked. Stops below there, or ultimately, below here. But look, the real problem here are the fees that you're going to pay, right? And that's why I really don't like trading Bitcoin down on the 1-minute chart. Yes, you got a 2.33, but you are going to be paying absolute fortunes in fees here. It's a 0.08% move, so it's very, very small. Better when we look at things like Ethereum, right? And those, you tend to just get better setups there. But ultimately, as we've said here, this is what's rejecting price. Is price now drawing back towards this, right? That's what we need to wait and find out. While we're above the New York Open, what might give us a nice setup here is if we draw back into this fair value gap here and then get our short set up, something like this, yeah? And then we can look to short this back down to the lows. However, we might not get that, yet if we close above this and take out this intermediate term high, which we highlighted earlier is a draw on liquidity, then I think we're looking for high of day, which is up here. All right, so we've got high of day, low of day, both offering really nice liquidity pools. What's really nice about low of day here, just before London opened in New York, we've got that abnormal wick lower, yeah? So showing a lot of buying power. If we dip back down below that, we've also got relative equal lows, which could very much be drawing price down. So let's just have a look at our 15-minute here, right? Now, remembering what kind of gave us our bullish conviction here was the 15-minute, right? But remember, it really wasn't very, very clean because we just kind of came back down and closed below it. Yeah. See, when we had this close above, remember I said to you earlier, we'd be looking for that. If that was in our New York session, then we would have been all guns blazing. However, price came down, kind of held this. We also drew in our order block, remember, which was here, which again gave us conviction that price was going to go a little bit higher. And then as we move down through the time frames, we're always asking ourselves, where is price delivering from? We're delivering from our nice bullish fair value gap here. And price ultimately then looked to chase down the highs that we put on the chart, right? And we would do that, like, remember, like I said to you, we would do that by just finding these confirmation setups, right? And for me, you know, I can't enter that trade here at 0.08%. The fees are going to be absolutely ridiculous. So even though the bias is correct, yeah, you might be sitting there thinking like, oh, BC, you idiot. Why don't you just throw out a long trade, put out a call? Because in truth, it's just not worth it for the fees. Even if I'm right here, I'm going to give up so much of my position to fees. And if I'm wrong, what it's going to do over time is massively, massively erode my risk to reward. Okay. So guys, do you have any questions on that today in terms of what we've covered? I'm sorry, I kind of went across and spent a bit too much time on NASDAQ, and we really did kind of miss that setup materializing, which we were talking about earlier. But I hope you can see that that's the kind of mindset in terms of how I'm looking to kind of overlay the idea and principles of momentum and certainly market dynamics as well. Because look, again, this was what was rejecting price, right? So if we just draw this back away again, yeah, and just focus on this, because price is delivering, yeah, we've got our bullish fair value gap here. Now, it would have been nice to see, awesome, thanks, Craigie boy, would have been nice to see price draw down into this, right? But look at what happens. Rejection, rejection, rejection. Remember I said to you, we're not going to jump into a trade. What we want to see is a strong close. Remember that word, strong close. And obviously Sod's law, as soon as we've gone across onto the NQ chart, we get that here, right? But if you watch this back, hopefully it will kind of all align and make sense, because the body on that has just said, no, I'm not respecting this anymore. This was a bearish fair value gap, which we'll just do in red to highlight quickly until we close above it. Then we get our inversion, right? That's showing us strength there. And all of a sudden we've got this high, and then this high up here, right? And remember what I said to you, and you can watch it back on the video, is I would then see how price reacts here, yeah, which was our bearish fair value gap. Look, bang, initial reject, bang, bang. See the close above it? Doesn't respect it. What does that then become? That then becomes another inversion. It becomes another failed bearish fair value gap, meaning that the chance of us going for this high is incredibly high, right? Because it's all about where price is searching for liquidity, all right? So I hope that that's been useful today. Let's keep an eye on that, see how that develops out. I'll be very active later on in the Nest chat, guys, for any of you that are around, so we'll take a look at that. Okay, this is interesting now, though, right? Like we were just discussing, we've got our bullish fair value gap here now, yeah? So we've taken out that low. This kind of short setup idea is based around this principle. It's just that we got this gap here, right? So now what we're saying is, oh, if I do that right. So now what we're saying here is if this follows pattern the same, we get this close below here, then for me, the likelihood is that we're chasing down liquidity lower, and it's not that low anymore because we've already swept that, right? So it's actually this low here. Yeah. And then we get below that, we would then be moving to this. Now, the issue that we've got here is that we're just very, very close to this internal low. And what you see here is, this is the problem, like I said earlier, when we just very quickly look at Asia. Just pop that indicator on so it's a bit clearer for everyone. Right, what we've done here, hey, just a dad, hello, mate. We've taken out Asia's low here, right? So we've taken that liquidity and look at the reaction here. As we step into London, we had this beautiful bullish reaction. Bang, 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 we've gone above. Now we've taken out Asia's high, right? So we've run Asia's high and Asia's low. We've taken out the two key liquidity pools. So when we have that, or when we have a particularly large move in Asia, because Asia typically tends to consolidate, then what we're looking for in here is typically messy price action. And that's what we can see if we go back to the 1 minute now that we're getting here, right? Price has come down. Yes, it's violated this, right? But now it's gone back the other way and violated it again. So let's zoom out and remember our high time frame and why it was very treacherous to take short positions there, as we discussed, because we're still holding this. We've got 33 minutes 42 here for price to come back above. Yeah. Now look at this candle, for example. Yeah. Now I bet there were loads of people that shorted this, right? Because price would have been down here or something at some point. And what they kind of failed to realize is that we're still delivering from a bullish fair value gap, which we'll just do in green, right? Price is delivering from a bullish fair value, and this candle hasn't closed, right? Yes, ultimately price came back down and did retest this fair value gap again, but it would have stopped you getting into the short positions there. And then ultimately all of that got bought back up, right? That's punishing people that have just got into the trade too early. So that's why we need to show caution here. And in 33 minutes, I would say if you take a look at what the candle close is doing then, look at the momentum that this thing's starting to build here. Again, we have to wait for the close. This whole candle could just completely reverse here. So if we just very quickly do this, right? This is definitely of interest here. Yeah. So 5 minute. Now, if we look across here, where's price delivering from? It's a little bit tricky this one, right? Because we've got this fair value gap here. We've got wicks into it. So I really would have wanted to see that low taken. Yeah. If price had come down and taken this low, which is an intermediate term low, right? A low that's within a fair value gap. Yeah. So if we come down and taken that out, and then close back above this, my conviction would be these highs, look at how price reacts at this fair value gap, and then look at this high up there for the target. All right. At the moment, unfortunately, it is just a little bit choppy. Bitcoin's having a nice run though. That is feeling the Monday love. That is. Again though, remember, we want to be cautious of this. Look at how price reacts into here. And just quickly to show you what I mean, because just a really, really good friend of mine. I'm so lucky to work alongside him. And he's such a talented coder and a funny little bastard as well. He really is my good friend Razoon, one of the trading team over with me at Birdnest, has made this brilliant indicator called Position Size Manager, right? So what we do is we put the first line on our entry, second line on our stop loss, and third on our target, right? Now, comes up with a little black box in the corner. It tells you what your position size is. Now, this is based on a $1,000 account and 2% account risk. Yeah, that means that if we lose $20, right? And every 1 R we win is worth $20. So our return here, if we get all the way up to here, yeah, which we did, 2.3 R, our return is $44, right? However, we've got a $23,000 position size, right? So 23,000. Now, what the fees and that you pay will depend on the exchange you're with and depending on kind of incentives and that you get. And actually saying that, I really do want to give a shout out to our new partner, Prime XBT. I'm going to get some more information from them on the show because they allow you to trade traditional markets with crypto as well. So, you know, I know it can be off-putting for certain people in cryptocurrency. And also you can get sign-up bonuses and deals that restrict your fees. And the reason that that's good, right, is because of this. If we just say, for example, we're looking at 23,500 as our position size, yeah? Now, what we need to do is we need to now divide that by, say, 0.08%, which is what we would allow for in fees, depending if we're using market opens, etc., right? And market orders, sorry. So if we go 23,500 times by 0.08%, you know, we've got $18 in fees, say, that we need to cover. Plus, you know, you can get slippage on some of the moves, etc. So your loss here isn't $20 if this is wrong. Your loss is like, you know, $38. meaning that you're basically asking for a 2.3R trade to be worth a 1-to-1, right? And the problem is, if you extrapolate that data out over time, it really, really, really starts to hurt your margins of profitability, okay? So here we go. Right, NASDAQ, now we're talking. So this is what we're looking for here now, right? Let's just pop back to our 5-minute quickly. I'm just going to leave you with this kind of parting thought. Now, this is what I wanted to see, okay? Because we've now come down and taken out, what have we got here? So actually the low before that, we've got a really sneaky low of day at. So Sunday's low is back here. That's interesting, actually. That's not right, is it? Should be after midnight. So that's low of day here. Now look at how this is starting to rip lower, right? This is a very, very interesting low here. Intermediate term low again. We've ripped liquidity past this. But if we recover this, right, as we showed in here, if we recover this and recover this fair value gap, but also if we create another one in here, then we could be looking for a bullish reversal here. Ultimately, if we go back to our 15-minute very quickly, let's look at this. What's there? 2300 pre-market low. Yeah, sat within this fair value gap. See, the reason that I got quite excited there, right, is because what we want to see for our high probability setups are key liquidity pools being taken, right? And if we look to the 15-minute here, we can see that we've taken out this. We can see again, right, okay, we already flushed Asia's low down here, right? But we've still got this low, which we've now taken out. So taking this out and then recovering this to the upside, we could be looking at some nice kind of long setups. However, we also obviously always want to have in our mind the higher time frame, which is why we've got this drawn in, which would add extra confluence, right? Price is forcing its way down into this area. If we come down and we find support here and move higher, then I think we're going to start making a move on these highs and then high of day as well. All right, guys, look, thank you very much to everybody that endured the rest of that. I know we lost most of you about kind of 10, 15 minutes ago, but I appreciate they're quite long streams. Just hope there's kind of been some useful information in there for you guys as well. We can see price starting to kind of have a bit of a bullish reaction here as well. Awesome, Joe. Really, really glad you liked it. Really glad you liked it. So you see how price is getting bought up now in here? Not saying it's going to stay that way, right? But look, a couple of minutes left on this one. If we start closing back above this, we're violating what is ultimately suppressing the market here at the moment, which is this bearish fair value gap. Close above this, I really do think that there's actually more bullish probability for the day than there is bearish. As long as we stay below them, though, and as long as we're respecting the bearish fair value gaps, right, then I think that's, you know, that kind of speaks for itself. We have to retain our bearish bias. Let's see how that plays out. Do pop me a message either in the Nest chat. Obviously, if you remember, do come along and grab yourself a free membership if you're not, and come and try it out and see if it's for you. Lots of great education, really great, knowledgeable community as well. Keep smiling. Thank you, mate. Very kind. Claudia, thank you, Claudia. You know, it's gone, I think, probably about 3 a.m. there as well. What an absolute soldier. And it looks like we might be just getting that bullish reversal right here as well. All right, guys, I'm going to leave that with you. Huge, huge thanks to everybody, Just the Dad, everybody else that was on the chat, Craigie Boy as well, skipping me in again. Obviously, our lovely Erica, Nip Par, loads of new people on today as well. Thank you, thank you, thank you. Great to see some old faces. Amazing to see some new ones as well. Hope you have a really great day ahead. Yeah, ping down and let me know. I mean, unfortunately, it looks like this thing's just going to absolutely rip, doesn't it? But hopefully, you know, you can see why when you zoom out. Always remember to zoom out. Like I say, always treacherous to kind of take these short plays when we're looking down and we're delivering from a bullish fair value gap. So, you know, on the 1 minute, we can see probably we get a nice little inversion set up, which we've got there, right? Now, again, not the greatest risk to reward here because of how high it closed. But like I said to you, when price just does this, it's just seeking liquidity. That first point of liquidity is there. This really didn't give us much of an opportunity, right? Closed here. Nearest place we could have put our stop down there was there. And this is where we'd be moving our stops to entry, right, to mitigate risk. So ultimately, it's a terrible risk to reward trade. But hopefully the principles kind of are understood. And if not, do let me know. Reach out if there's ways I can improve these streams. I'm always really interested to hear from you. Gregory Brown, thank you to you as well. And thank you to everybody for today. Brilliant to be back with you. Whack, my friend. We're going to absolutely start crushing it this week. Live trading sessions are going to be kicking up again this week. Tomorrow, I've got a couple of meetings I need to attend. So we're going to kind of do a pre-market session. I'm going to get everybody all set up with the setups that I'm going to be looking for tomorrow. And then I'm going to be asking you to paper trade them and see what you kind of think, see if they make sense and see if we can get some more wins under our belt. About 3.5 are up at the moment from our trading sessions, which we started just before I took my break. So I really want to maintain that. And then we'll be doing a big funded challenge soon as well with our new prop desk, which is launched over at the Bird Nest. All right, guys, wishing you all a fantastic week ahead. Please do keep an eye on the news tomorrow. We've got CPI, which, injects huge volatility into the market. We often see, leverage get attacked on both sides of the market before it settles. So we'll cover that on Wednesday's show, look how we can kind of trade those sessions or whether we should just completely stay clear of them. But just a big thank you to everyone. Have a fantastic week ahead. Really look forward to seeing you all on Wednesday.